In market profile theory, the initial balance, the high and low of the first hour after the open, often defines the day's key reference points. Whether the session expands beyond it or contains within, that early range offers critical insight into market conviction. This free TradingView indicator from UkutaLabs automatically defines the initial balance, defaulting to the New York session, but is fully customizable for other timeframes. It also calculates and displays custom extension levels, updating seamlessly with live market data. In this video, we'll walk through indicator setup, use cases, and the logic behind the levels, how to visually isolate the opening range, and why many traders use initial balance for both breakout confirmation and reversal strategies. If your trading depends on structure, time-based levels, or clean session logic, this is a tool worth understanding. Before breaking down the indicator, it's crucial to grasp why the opening hour plays a key role in shaping the trading day. The first hour after the market opens, often referred to as the opening range or initial balance, is one of the most critical periods of the trading day. This is when overnight sentiment collides with real-time market reaction, creating a burst of volume, volatility, and directional intent. Institutional traders, hedge funds, and retail traders alike place orders based on news, earnings, global market moves, and overnight positioning, all of which materialize rapidly once the market opens. During this first hour, market structure begins to form. The high and low of this period often serve as short-term support and resistance levels. Many traders use these levels to gauge market conviction. If price holds within this range, it may signal indecision or a balanced market. But if price breaks out with volume and follow-through, it often sets the tone for a trend day or directional expansion. This is why the initial balance is so widely used in strategies involving breakouts, mean reversion, and market profile techniques. From a psychological standpoint, the first hour also reveals where control lies, between buyers and sellers. It exposes early imbalances, fakeouts, and reactions to pre-market catalysts. Traders who can interpret this early action have a clear advantage with planning entries, managing risk, and adapting to evolving market conditions. Tools like the initial balance indicator automate this range tracking process, helping traders anchor their decisions in time-tested, session-based logic. All right, let's open up TradingView, drop the indicator onto the chart, and go through how to set it up. To begin, we'll add the indicator to our chart. Click the Indicators button in the top toolbar to open the search panel. Next, type Initial Balance into the search bar. For this video, we'll be using the version created by UkutaLabs. Go ahead and click on it to add it to your chart. I'll also add the link for this indicator in the description below. Now let's quickly review the settings for this indicator. Let's begin with the session range setting. By default, it's set to the New York session UTC-5. However, you can easily adjust this to match your local time zone or switch to a different session altogether. For example, the London Open. Up next are the label and line options, allowing you to tailor the visual appearance based on your trading workflow or chart layout. Similar to the label and line options, the color of the indicator and its shading can be fully customized to suit your visual preferences. Lastly, we have the extension level settings. You can add as many extension levels as you need, or disable them entirely by setting the value to 0. There's also flexibility in styling. You can match the extension line colors to the main indicator, or choose a completely different color to suit your chart layout. Keep in mind that different markets, such as commodities, Forex, or indices, may require different extension configurations, depending on their typical price behavior and volatility. All right, now that everything's set up, let's walk through some chart examples and see the indicator in action. First up, we're looking at gold futures at the New York market open. Since this is a time-based range indicator, it can be applied to any session or period you prefer. That said, using it in alignment with commonly observed market opens, like New York or London, tends to yield the most reliable results, especially when used in confluence with other traders' activity. Here we have gold futures once again, but this time at the London market open. Interestingly, if you didn't know which session you were looking at, it would be hard to distinguish between the two just by observing the indicator alone. For the remainder of this walkthrough, I'll use orange to represent the New York session and purple for the London session to help clearly differentiate between the two. Next, we're looking at NASDAQ futures during the New York market open. In this example, we see a clean breakout beyond the initial balance range. This highlights another valuable use of the indicator. helping identify potential target levels for partial profits or guiding trailing stop placement as the move develops. For example, if we entered just below the bullish breakout candle, we could structure the trade as follows. We'd place the stop just over the high of the candle we entered on. From there, each extension level can serve as a potential point to take partial profits, close the trade entirely, or trail our stop to lock in gains and manage downside risk. Here we're looking at the S&P 500, one of the most closely watched ETFs in the market. If you trade individual stocks or simply monitor the SPY for a read on overall market sentiment, the initial balance indicator can be a powerful addition to your toolkit. By mapping out the first hour's high and low, it gives you a clear structure to assess early momentum, spot potential reversals, or confirm breakout strength. Whether you're trading the SPY directly or using it to gauge the broader market's tone, this indicator helps frame the day with greater confidence and clarity. For example, if we do a side-by-side comparison with Google on the same day, we can clearly see an attempted breakdown below its initial balance low. However, with the SPY remaining within its own range, the move lacked broader market support and quickly failed, pulling Google back into its prior range. A second attempt to sell off also lacked confirmation from the broader market and ultimately failed. While it's possible for a stock like Google to decline independently of overall market direction, those instances are the exception rather than the norm. When analyzing the S&P 500 alongside individual stocks like Google, the initial balance indicator proves especially useful in assessing the strength and validity of early moves. For example, while Google may attempt a breakdown below its initial balance low, a lack of confirmation from the SPY, which remains range-bound, often signals that the move is likely to fail. This kind of divergence can help traders avoid false breakouts and better understand market sentiment in context. While isolated sell-offs can happen without broader market support, such occurrences are relatively rare. Using the SPY as a reference, alongside the initial balance indicator, provides a more reliable framework for interpreting early price action and making higher probability decisions. All right, let's move over to Forex and see how the indicator performs in currency pairs. In this example, we're looking at the Euro-USD pair during the London session open. Even in the often volatile Forex market, the initial balance indicator provides a clear sense of structure, helping to frame price movement and identify key levels within the early session. This structure is especially valuable in Forex, where price can often feel erratic or news-driven. By anchoring the session's high and low within the first hour, the initial balance creates a reliable reference point that traders can use to anticipate potential breakouts or reversals. In this Euro-USD example, we can observe how price respects the initial range before eventually expanding, offering multiple opportunities for entries, exits, or trailing stop adjustments based on extension levels. Whether you're trading London volatility or looking for confluence with macroeconomic events, the initial balance serves as a disciplined framework in an otherwise fast-moving market. For our final example, and to highlight just how versatile this indicator truly is, we'll take a look at NIFTY futures on the India Stock Exchange. While the initial balance concept is often associated with U.S. markets, its principles apply just as effectively across global exchanges. In this case, we're using it during the India market open, where NIFTY futures show the same kind of structured behavior we've seen in U.S. indices, commodities, and Forex. The key takeaway here is that the initial balance isn't limited by asset class or geography. As long as there's consistent session-based trading activity, this tool can help you define the day's range, anticipate momentum shifts, and plan your trades with a greater degree of confidence, whether you're trading NASDAQ in New York or NIFTY in Mumbai. The initial balance indicator by UkutaLabs offers traders a simple yet powerful way to bring structure to the often chaotic first hour of any trading session. By automatically plotting the high and low of that opening range, along with customizable extension levels, it gives clear visual reference points that can be used for identifying breakouts, planning targets, managing risk, or simply understanding where control lies between buyers and sellers. Whether you're trading futures, stocks, Forex, or indices, this tool adapts to your session of choice and works in real time, making it a reliable companion for both new and experienced traders. Throughout this video, we've seen how the initial balance holds up across multiple markets, from gold and NASDAQ during the New York Open to Euro-USD in London, and even NIFTY futures on the India Stock Exchange. In each case, the indicator provided a consistent framework for interpreting early market behavior and aligning trades with price structure. No matter what asset you trade, Having a clear view of the session's first hour can offer meaningful insights into momentum, volatility, and potential turning points. So, whether you use it for breakouts, reversals, or simply to gain clarity, the initial balance is a timeless tool that deserves a place on your chart. Thanks for watching. I hope this video helped you better understand how to use the initial balance indicator to bring structure and clarity to your trading sessions. If you found this helpful, feel free to like the video, subscribe for more trading insights, and drop a comment if you have questions or want to share how you're using the tool in your own strategy. Until next time, trade smart, stay disciplined, and keep learning.